Good morning, everybody. Welcome to the Investing Bros this morning. We got a lot to talk about on this show. We had two very big stories yesterday, as we did have that very much anticipated FOMC meeting where we did raise interest rates by 25 basis points. And despite the fact that Jerome tried his absolute darndest to FUD the market and talk about how resilient banks are over and over and over again, he did hint at the hikes coming to a close very, very soon. We'll talk about that more in this show. But the bigger story potentially is this new notice, this Wells notice that Coinbase received yesterday, which traditionally is followed by actual legal action. Does Gary and the SEC even know what they're doing anymore? Is there any chance in the entire world that they actually win this? My opinion is not, but we'll tell you a little bit more as to why that is later on in this show. Go ahead while you're here, smash that like button, and thank you so much for joining us here this morning. If you are new, we are the Investing Bros. We go live every single weekday morning from 9 to 10 a.m. Eastern Standard Time, soon here in April to 10:30 Eastern Standard Time, where we talk about Bitcoin, we talk about crypto, talk about the stocks. We cover the TA, the trading, and the news, everything you need to know so that you can be the best investor for yourself that you can be. So make sure to join the community, not only here on YouTube, but go join our free Discord as well. With that said, I'm joined by two amazing, fantastic co-hosts this morning. I'm going to start off with the man sitting across the desk from me, Mr. T. Shroom. How are you doing this morning?
Better than I deserve, Tim. I'm doing really, really well. Other than the fact that coffee makers let me down this morning. So I have no coffee. I do have this glass of what might look like something else. It's coffee tea. Have you ever used a Keurig and basically the water got oversaturated and it didn't go through the cup right? And so you just get coffee tea where it's mostly water.
Sure.
That's what I'm rocking with this morning.
So you're
Tim.
telling us that is not scotch.
This is what I'm drinking this morning.
Okay.
Let's go to the quote of the day. The quote of the day is, "The early bird gets the worm, but the second mouse gets the cheese."
Oh, I thought it was going to rhyme.
Nope.
I was like, what's going to rhyme with mouse?
Right. And so there we are.
Mm.
I think that this is a good quote because it kind of illustrates that laziness can sometimes be useful.
And who doesn't want a good piece of cheese instead of a juicy worm in the morning?
Right. I think that's also the takeaway, is that cheese is delicious.
Yes.
Who can disagree with that?
Well, thank you so much for that quote there, T-Shroom. We're also joined by Army Piper. Army Piper, did you get a worm this morning or did you get a good chunk of cheese?
I got a good chunk of cheese and a cup of coffee. A better cup of coffee than what T-Shroom got. But T-Shroom, I need you to share your screen for me, brother, because I could not show your quote when you brought it up. So.
Oh no!
What a tragic.
Oh yeah, I know, it's great. But yeah, I got up this morning and got myself a nice big chunk of cheese and had some scrambled eggs with it. So that's good, right? So
there we go.
Yeah,
very, very, very nice. T-Shroom and I last night were playing the grand old sport of pickleball. Ooh, got a camera movement. There we go. That's beautiful. We were playing the grand old sport of pickleball, and I woke up a little tired. I'm not necessarily too sore or anything, but my body is fatigued. If you guys have not gone out and played a good sport of pickleball recently, you should give it a try. Fun sport, very fun, not too bad on the body. Basketball probably is the all-time, especially as I'm getting older. Basketball really does a number on me when I still play that. But we're going to continue on with the show here in just a second. But first, we have to do one of the absolute most important things of the show, and that is, I got to give you a Beamer update really quickly. Beamer's been a good boy. He broke his collar the other day and escaped the yard, but I think I told you guys about that. But he now has a full body harness, so that I don't want to see him try to break that one. To strap him into that leash. But he's been very excited. He's been behaving himself because he knows that Bitcoin is sitting in a very good spot. Anyone who doesn't know, Beamer is my dog. He's kind of a focal point of the show. He always seems to do things around big moves in Bitcoin. So the fact that he hasn't escaped yesterday or today was a good sign that Bitcoin was going to hold up versus the SEC. I got to do another thing that's very important, though, and that is reading of names. And I got to give a shout out. I'm going to start off by giving a shout out to the first commenter because they deserve it. Ooh. Nice drum roll. A mellow fellow was the first comment of the day with the GM. Take it, he's not a Ford guy whatsoever. So thank you, a mellow fellow. Yes, there we go. Gosh, got all the sound effects in here. I also have to give a big shout out to Curtis Rorick, who he commented, a mellow fellow got it first. Tim, post your poll. Great assist there from Curtis Rourke. Let's read some other names that are here, though. Justin Eubanks is here. Joe Nickel is here. Mellow Fellow again. Yair Navarro is here. Al Bundles. Alex Green. Let's see who else. Investing Bros is in chat, but that is I. Crypto JMP is here. Jay Enkar. You have to tell me if I pronounced that one correctly. Alex Green, Crypto JMP. Let's see. Eric Wallen is here with some very aggressive questions about pickleball. So I don't appreciate that, Eric Wallen. Let's see. Who else is here? Army Piper with the blue wrench and the super chat saying invest in yourself. Very good super chat. Very good observation. Very good recommendation. Ninja Glock is also here. Let's see who else. Gia S is in the building this morning. Mr. Bitcoin. Let's see who else. Couple more names and we'll keep moving on here. Elliot Locke is here. Crypto Trades is here. Crypto Ben Franklin. Juice Toes. Z Canceling Radio. Very good name. Crux of Crypto again. Rose Petal. And we'll get two more. Brad Geidel and Elo Brown. Shout out to everybody who is here. If I did not read your name, it is not because I don't love you. It is just time to go ahead and move on with the show. And I want to start off by throwing it to Army Piper for some macro stuff before we jump into TA, because there is a whole lot to unpack with price action, with news. But first, let's start off. Piper, is there anything, now that we got past that FOMC meeting, what are we looking forward to at this point on the more macroeconomic state of the market in general?
Thanks, Tim. Check it out, man. We've got some stuff coming into it. Initial jobless claims just came out a little bit ago, about 37 minutes ago. We were previously at 192,000 jobless claims. So what these are is the number of people that filed for unemployment during the week, right, from last week. We were expected to be up on a consensus to 197,000 jobs lost, and then a forecast of 193,000 jobs lost. We actually came in under at 191,000. So your Auntie Beth is wrong. It is not causing jobs to be lost. We're not there yet. So I know you're going to have to call her and talk to her about her prediction of 1%, 2 million jobs. We actually went down, not up. So we got that. That's what's going on today. We got new home sales and new home sales month over month that'll be coming in later here in about 52 minutes. But tomorrow, we've got Fed Bullard speaking tomorrow, so we'll see what he has to say. It's going to be at 7:30 my time, so 9:30 Eastern Standard Time tomorrow. So there might be a little bit, depending on what he says. Usually when he speaks, he's got some juicy little tidbits post-FOMC, so we'll see how that plays out in the markets. But overall, just S&P Global stuff coming out tomorrow and durable goods. So we have pretty much made it through the major stuff this week. This durable goods tomorrow morning at 8:30 Eastern Standard Time will be the biggest thing that we have in the markets this week. However, next week we go into a whole new week of stuff going on here. Looks like next Friday is going to be the personal income and the core PCE price index. So that's what we got looking at there, Tim. Not seeing much else in the macroeconomic news. We've made it through the big hurdle, which was the FOMC and the Fed rate hike that happened yesterday. So
Very good. Very good. Well, I think it's going to be really important to see the home stuff because that is going to be one of the biggest factors over the rest of the year of what inflation looks like. And Jerome Powell kind of mentioned that yesterday. He did discuss how it looks like at this point leases or rental prices are coming in a little bit lower, which should start to see a dip in housing costs. Really quickly, before I do TA, go ahead and share my screen here, Piper. We're already now on the watch. What happens next month in May for the FOMC meeting? We got 2 months, so we have 41 days. That's not quite 2 months. That's like a month and a third or a fourth or so. So we got 41 days until the next FOMC meeting. At the moment, the current rate is 475 to 5. 52% of predictors are saying we're going to stay put. 48% say we're going to get that extra 25 basis points that Jerome Powell talked about. We will get into that during the story section, but I want to fast forward over to December. Let's see what the predictors are saying right now. 31.8. Technically, this is the leader, are predicting that we end December between 425 to 450. This goes against what Jerome said yesterday, where he and the Fed are predicting or saying that they're expecting to end the year between 5 to 5.25. So, who is going to be right? Are the Fed going to stick to their guns, or are we going to see these CME future predictors maybe come out being correct? With that said, let's go over to Bitcoin's chart. And by the way, let's go ahead and vote in that poll, everybody. We got like 80 people watching right now. I was proud of my poll this morning. I am disappointed that Auntie Beth firing Gary only has 7% votes. I was really thinking that we could get some more votes on that one. But right now, Coinbase will win, is the leader. The question over there is what will happen in the SEC versus Coinbase lawsuit. The options are Coinbase will win, SEC will lose, Gary Gensler will quit, or Auntie Beth fires Gary. Go post your vote right now. I want to know what you guys think. Back over here to Bitcoin. So, a lot of volatility happened yesterday, just as we predicted. Let's go down here to the hourly chart. And I'm going to turn off Chart Prime for just a second before I turn it back on here in a second. We rallied up into the report. We actually even had some nice spikes during it, but we did dip on the news when Jerome Powell started to speak. This is the hourly charts. Let's see what time. Actually, let's look at the 30-minute chart because that'll tell us a little bit more. Yesterday at 2 o'clock, we dipped. We started a little bit dip, and then when Jerome Powell started speaking, that's when the real dip started to come in. However, we held up on a very, very good level of support. Yes, we dipped down below, but let's go out all the way back out here to the 4-hour chart where you guys can see this red line, this red level of resistance is continuing to hold up. The daily chart, even, we did not close below it. We actually closed right on it, and that is very significant because guess what? This pattern right here is what we call a megaphone pattern. And those who don't follow me over on Twitter, go ahead and go follow me on Twitter because I posted this on Twitter. But I wanted to show our YouTube community this as well. Take a look at this post that I did yesterday. There's two images. I took a picture of what we had yesterday, and I took a picture of what you do with bullish megaphone patterns. Traditionally, they play out a 1 setting the first resistance, 2 setting the first support, 3, 4, 5. They break above, and then they use this former level of resistance as support on their way back up. I am not saying with 100% certainty that Bitcoin is about to just scream up. I do think a big breakout is coming, either to the upside or downside, as the title suggests. But look at what we did. While technically price dipped a little bit below it, coming back up and closing above this level of resistance kind of stays on par with how you read bullish megaphone patterns. Of course, we came bullish into this megaphone pattern, and there you go. We got our 1, 2, 3, 4, 5. We have our 1, 2, 3, 4, and we've hit our 5. The next expectation, if traditional TA holds up with megaphone patterns, is that we should bounce here and rally to the upside. So keep your eyes on that. Let's go ahead and take a look at some other things, though. Let's go out to the daily chart and look at some price targets to be keeping your eyes on, short-term and long-term. First, yesterday we did reject on a very key resistance level according to Chart Prime right here at 28.8. We talked about that a little bit yesterday on that show, the afternoon show actually, but the next level sitting right above it is getting closer towards that 30,000 prediction at 29,200. So keep your eyes on that. But let's go and play in these settings here a little bit in our money concept bundles. Let's take down those levels of support and resistance, and I want to pull up some let's see, I think it was our enable our order blocks. So these order blocks are very important. These are levels where there's a lot of money in here that institutions and whales are liking. There is an order block sitting right below us right now. So this is what I'm talking about. We could have a little bit of breakout down or above, but we have one down here at 26,300 down towards 25,800. That's a key level. I'll talk about 25.8 here in just a second. But the other one, the one I'm keeping my eyes on still, and the fact that we're holding up with this level of support right here, I'm looking for this order block up here between 29,900 and 31,700 to potentially be filled here very soon, with potentially that run up here towards 32. Another thing I'm keeping my eyes on here using the chart prime indicators is the weekly chart right now. Our dynamic reactor on the weekly chart, when it pops up here, is being used as resistance as we speak. But this is something I'm keeping my eyes on. Can we get a nice bullish breakup and turn this dynamic reactor green? That would be huge for Bitcoin. So keep your eyes on that as well. Let's go back down to the daily chart. And I also want to pull up our oscillators. Now, this is something that's going to be very, very important to keep your eyes on. Another reason why I do think a breakout is coming here very soon. You're going to see me post a video tomorrow over on the Chart Prime YouTube channel. So when you're done with this video, go subscribe to that channel. You're going to see a lot of content from me and Army Piper breaking down a lot of trading strategies, things in TA. But we've been in a series of time. I'm not going to show you guys. You're going to have to wait till tomorrow for the video. But there have been some phenomenal signals from this indicator, or this oscillator right here, the Chart Prime oscillator, where when we get a double signal, either reversal or a reversal down or a reversal up, that we have been playing out some beautiful trades. But one of those things is when you see a double indicator, sometimes during this little stretch right here, ever since back in June, if you used a risk to reward ratio of 20% take profit, 10% stop loss, you would have crushed it in the trading game. And this is something I'm keeping my eyes on. This double reversal to the downside. We're overbought with the red triangle reversal. This should indicate that you should be trading to the downside. So if you kept up this strategy, you got to know when to stop using a strategy. But if you kept up this strategy, you're looking something along the lines of entering a trade that would have Bitcoin come down to about 22,100. You'd set your stop loss. Let's see. Yeah, right about there, about 30,400. So you don't get stopped out there. This is a trade opportunity that is potentially there, but I want to caution some people because a bull trend has started. And the only time when I use this strategy, I'll go ahead and give you guys some teasers. When I use this strategy of trading 20 to 10 and looking for opportunities when we have double confirmation, there was only one time in that entire series of this little accumulation phase that it did not work, and it was right here. This one right here, this overbought red triangle, this is because we had started a bullish trend. When you're in a bullish trend, you're going to see bearish indicators sometimes fail. So you got to use confluence and you got to use proper trading psychology when you're looking at this. This is also right here. I'm sitting here with a little bit of uncertainty about these signals. And sure enough, after that, we continue to rally up. It's too early to say for certain with that predictive reversal down and these double reversal signal on the oscillator. There's going to be some people very tempted to enter a short. The problem is we broke above that very, very key level of 25,200, signaling that confirmation that we are in a bull trend right now. And it is very, very hard and more than likely unwise to bet against trends. If you don't believe me, just take a look. If you had been hovering back here in the bear market, look at all this nice eye candy on the oscillator, which, by the way, beautiful, beautiful signals and work very, very well. But when you don't use this with confluence and proper thought, there would have been several times you would have entered along and it just would not have worked out for you because the bear trend has power. Same thing is going to happen over here in bull trends. In fact, you don't believe me, let's go over here. Look at all of the candy on the top signaling reversals during the bull market of 2020, 2021. A whole lot, and yet a lot of them just got ignored completely. That's what I'm looking at right now and saying, yes, do we have some bearish signals? Are we overextended and overbought at the moment? Absolutely, but that happens a lot when you're in a bull trend. And due to this, I do believe a big breakout is coming. Like I just mentioned, it could be to the downside. This could be one more good shake from the bears to try to keep this bull market bull trend from running away. But what we're seeing happen, the resilience, not of the banks, Jerome Powell, the resilience of the crypto market since yesterday's very fuddish but weird FOMC meeting, I think there's still a decent chance that Bitcoin bulls make a push up towards that 32,000 and keep going to the upside. Let's take a look at some other things here as well. Let's go over to the Dixie where it is plummeting. We are sitting right on top of the 0.5 level of Fibonacci retracement. So while we have some wicks below, it is holding up there nicely. But they realize this. There was a tweet put out, I think this morning, by Elon Musk saying that banks are melting. Jerome Powell did his very best to try to reassure the populace that banks are safe, the US dollar is going to be fixed. And I don't think at this point, looking at the charts, people are believing him. I'm still watching for a pullback all the way down here towards the golden pocket on the Dixie, down towards $98. You're going to see that's also going to be a strong level of support in a trading channel that Bitcoin has been in. But you're going to start to look now, if we cannot make another rally push up here, this channel might end up switching to where I take out this information, come down here, and we're starting to make a falling wedge pattern here. We'll keep you posted on what that looks like. Either way, for now, the Dixie is looking bearish. I wanted to stop right there. I want to throw it over to Army Piper because I know he has some thoughts as well about Bitcoin and Ethereum and other coins. But Piper, comment what you want about Dixie and Bitcoin. Do you agree or disagree with me? And what are some other levels you're seeing on those charts as well? I know you have some trades. You had some trades going on Ethereum and XRP. Are those closed now, or are you continuing to enter into those?
So I closed out the XRP trade. The Ethereum trade, I'm actually adding to my position because I only went in with 10%, but I still think we might have a little more downside on that, and I'll show you why. Let me jump in here and show you Ethereum. Looking at Ethereum, by the way, on the Bitcoin part, yes, I think that you are right. That broadening megaphone there is absolutely giving support there, especially on the higher time frame. We didn't even close a candle below it, but yeah, so I'm watching that one closely, but what I'm watching right now is my Ethereum chart because as you can see, looking at the fibs right now, we had our rejection cleanly off of the platinum pocket here. Coming in on the 78.6, like exactly on the platinum pocket was our rejection point. But we're still holding above the golden pocket, and we're also holding, if I go over here, let me grab up this fib and turn it off. You can see that we're still holding above the trade band of the predictive ranges here. So looking pretty decent there. I mean, we do have the oscillator on its way down, but it don't really have that sharp declination angle on the ribbon. So I'm watching for the histogram to turn light pink here, giving me indication that the volume's starting to turn around a little bit. And then I think we're probably going to bounce on this zero line right here on the oscillator and then come back up for more, which would coincide with the convergence here of the upper trade band and this trend line that's auto printed here from Chart Prime's Market Oracle. The other thing that I want to show here is, and let me pull it up here, I want to show you what I'm looking at here on the Smart Money Concepts, because we do have an order block that's going to be coming in coinciding right with, let me get all these turned on first, and then I will show you what I have here for that and the fair value gap. There we go. Turn back on that fib, and voila, you can see that we have a fair value gap coming in right here. That's this little green block that you have going on right there in the chart. Let me zoom in a little bit. There you go. And we do have a continuation of this order block. So on these order blocks, they're set that after so many touches, they will turn off. But if I go in here and I turn this up to like a 4 or a 5, you'll see for the number of breakouts, we've got a consolidation of the golden pocket, the fair value gap, and this order block here. I'm thinking that if Ethereum comes down into this line right here, hitting that 66% there on the top of the golden pocket, along with the order block, this fair value gap, and this trend line, this will be where I'm adding into my trade position on Ethereum. So that's what I'm seeing on there right now for Ethereum as we speak. One last thing that I want to show you here, I want to take a look at ADA. ADA's had a little pullback going. And I've talked about this, how far it could pull back, which it did when we were talking about this. We actually got the bounce right on the golden pocket here. We did not quite get down to the platinum pocket, but we wicked down perfectly to the fair value gap that was created back here. So perfect wick bounce off of that. Now, what we're currently looking at on here is, you can see, it looks like we're starting to get another curvature here on the oscillator. But overall, for the most part, ADA looks really good in comparison to what Ethereum and other charts are looking like, because we still have bullish structure going on. We're still making higher lows. We're still making higher highs. I think that what we're probably going to end up seeing here is that this upper resistance band that we've now got support on here, just to clean this up so that people can see exactly what I'm seeing here. This is the, and I want to turn that off 1 second. I want to turn off the fair value gas now that I showed you that, so that it's nice and clean. There we go. You can see this is the predictive range support line of the upper support band. So right now we got a clean candle close on that. I do think we're going to come back, maybe touch this wick down to the dynamic reactor, and then continue back up, closing that candle higher than this low, but wicking down to get that extra support and retest on the dynamic reactor. So it looks like ADA could continue its path up right now. And get back above that 39-cent line. And then I'm looking at the 40-cent line just for that psychological rejection. So
I absolutely agree with that one. Yeah. No, I wanted to show, I was going back and looking at, we've been talking a lot about, I'm going to throw it back over to Bitcoin, go back to Bitcoin for a second, because I think even the things that Piper was looking at, I told you guys when I was doing the TA, hey, we could get a breakout to the downside. There is some bearish momentum. There was some FUD said yesterday that while most of us watching this channel, and we've been studying this, we know that it's going to end up being bullish. It could send us back down. I believe if we were to look at the bear market of 2018, 2019, as we started again, what I've called the premature bull run, this was a bull trend before the real bull market. Oh, there's some audio playing in there. So what we have going on right here, I believe where we currently are, if we were to try to mimic and look at exactly playing out what we had back here in 2019, I believe we're sitting somewhere right in here. I believe we're somewhere right in this region. Notice that we did have a red wick. This is the daily chart. Come back down to test this former resistance level, turn support. Back then it was 6,696. Again, that's going back all the way over here to the resistance level we had before the big drop in December of 2018. We retest that before taking off to the upside. You guys know I've talked about this. We ended up revisiting the golden pocket and then having a 50% dip back down to these levels. Let's fast forward. Let's go all the way back over to where we currently are. Guess what that would mean? If we end up dropping here, we mimic this perfectly, which it would make a lot of sense because of some FUD in the market. If we can't hold this line of support, watch us potentially come down and retest with a wick this little line right here at 25.2, shoot back up, and then start a drastic climb over the next little bit. All this would take, by the way, in the news is we find out another bank closed. Again, with that tweet we saw from Elon, I saw Crux of Crypto put that tweet there in the chat. You guys can go look at it. If banks are in as much trouble as what we think they are, we could see another bank fail literally at any moment, any second, any day in the foreseeable future. And we get one piece of news, another big bank or medium-sized bank crashes. The confidence in what the statement from Jerome Powell and the government is right now, banks are safe, banks are resilient, banks are good, trust the banks. Another one falls, it'll just shatter the confidence of banks that's already very, very much on the brink of disaster. And people are going to start flowing into things like Bitcoin, like gold, like crypto. I think Bitcoin more so than other altcoins. Again, I've said that before, not going to go too much more in that direction. But like I said, keep your eyes on that, that we could come back down and retest this 25.2 and still be on a way of repeating history to having a nice little explosive run up to a golden pocket all the way up here towards $50,000. Well, guys, we're going to end the TA here a little bit early.
I got one quick thing to show real fast.
Yep, let's do it.
So
market open here in 2 minutes.
Yep. So yesterday I was showing you guys how we were above the Gaussian channel here, and if you actually, yesterday looked like a major drop, but if you actually just let it play out, you'll see even yesterday's drop on the 5-day chart, we did not come down and still retest the top of the Gaussian channel here. That's going to be coming in at about 26,000. 22.8 would be the 50% line. So we could break that top Gaussian channel there, or even hit the middle line and still be in a bullish structure here on consolidation. So
it's very important. Again, I think most people here know this, but in case anyone is watching it doesn't, it's very important to know that bull trends include dips in price action. That happens all the time when we're looking at charts in bull trends. They do have retracements. They do have price that comes back down simply to solidify some support that is a higher low and continuation of the bull trend. So I am not too concerned. Again, I do believe a breakout is coming, and I think there's a chance that breakout is to the downside to find support, and then to the upside. But I'm going to hold to my prediction of seeing a $42,000 to $50,000 Bitcoin here before or right in the beginning weeks of May, before another big dip comes back in, brings us back down towards levels we currently are at, maybe closer towards 25.2, and then we wait till later this year for the actual bull market to start. We're about 10 seconds out from the market open, so I want to throw it over to T. Shroom to even get some of his thoughts. Are you in agreement with Army Piper? Is there anything that you think that we're saying that's absolutely ludicrous before we get into this market open?
No, I think it all makes sense. I mean, you're not saying anything too crazy here. It's all pretty measured. Let's see if the market is going to be measured here. So going over to my screen, you can see, let me just make 100%. That looks good. Start off with energy here. Oil coming back up, almost up 2%, but it is up 1.8%. Natural gas, not so much. Still down 0.5 there on the ETF at least, whereas the future contracts on natural gas are actually up 0.2, but you don't care about that. Let's keep moving into the indexes. Indexes are green across the board. These are the ones I'm looking at right here. The big three: Dow Jones and Caleb Franzen. I saw him in the chat. He might be watching. I might add the Russell here because the Russell is also an important index. But the S&P up 0.8, NASDAQ leading up 1.4, and the Dow Jones trailing up 0.5. But equities getting bought this morning, U.S. equities at least. So that's really interesting to see after the events of yesterday. We'll get into some of the stories that led to a market sell-off at the end of yesterday after 2 o'clock and all the events that happened there. And it's not what you think. It's going to surprise you a little bit. Green on the screen here for crypto, other than Optimism Chain. That's an interesting one to be the odd man out here. But yeah, across the board, very green. XRP looks like it might be the leader of my watch list. And it is indeed. It is up 5.6%. And the biggest loser there, again, Optimism Chain. But ADA looking good, up almost 3%. Tron looking good. Interesting to see Tron up this morning because they actually have come to the crossfire of the SEC as well. And we'll get to that in just a second. But they're up 4.8. All right, moving away from crypto. And just before we do, I will point out Litecoin is also doing really well. They were up quite a bit in pre-market as well. So gold and silver getting bought. Silver leading the way up 1.3%. So
look at the gold chart. Pull up the gold chart real quick.
Let's go take a look at the gold chart here. Yeah, look at that. So that's the daily chart there. And as you can see here, it's come off some support yesterday there from some a chart prime line that's been drawn there. So it's found support off this previous resistance, and it is it's making a push back to see if it can close back up above 1988. If it could get back up above this wick at 2009, that would be really great and probably indicate even further that it is in a bull market, a bull movement here for gold. But that's going to be gold. That's not a crypto or stock. That is an alternative investment that has been owned and preciously valued since the beginning of time.
I think gold is going to be an important one to watch throughout this whole thing because there will be traditional investors who don't necessarily, they're not going to trust banks, but they're not ready to make the jump into crypto, even Bitcoin, and watch them flow into gold. But what you're going to see is I think we're going to see Bitcoin and gold. Obviously, Bitcoin's going to outpace gold, but we're going to see them move similarly with the same colored candles, measured moves together, because there's going to be an outflow of trust from the banks. And they're going to say, where do we put this money? We got to put it in a commodity we can trust. Certain people will make that jump and leap into Bitcoin because they see its future. Some people will say, you know what, I'm going to stick with Old Faithful and go with gold. So I think that's going to be a very interesting chart to watch here over the next 2 months.
It's interesting you say Old Faithful because this chart that's on my screen right now actually illustrates that very, very well. You can see here the price of gold relative to the S&P, and I believe it's the S&P. Yes, S&P. And so the recessions are when the S&P has corrected a significant amount. You've got 73, you've got 9 and 80. In 80, gold was actually down. Gold was actually down. That's the outlier. Every other point at this chart, gold was up during the recession. So it was up during the time that the S&P was either down or anemic, meaning not performing at 9% on its expected annual average. Moving back into our market open here, an astute point of view there from Tim that I just wanted to further illustrate. Big cap tech stocks are doing well. Tesla leading the way up 3% here, and Apple being the biggest lagger, but it is still up 1%. So very interesting. I will point out here Microsoft, because I've said it almost hit its all-time high. I was definitely incorrect on that yesterday.
Yeah.
It did wick up above its highest point for 2023. So you can see it starts the year right here. And as you can see, it wicked up higher than this, but its daily close actually was eclipsed yesterday by a wick. So it didn't close up higher. That would have been nice to see if you're a big equities investor, to see Microsoft get up above that. It was not able to. Keep on tracking. We do see green on the screen there for mega cap. Let's see if it's the same for microcap. But before we do, let's take a look at the bonds. Looks like they're selling off a little bit this morning. I say a little bit for our volatility times that we're in. And then the gilt is getting actually bought. And I say that because when the yields are up, that means that the bonds are getting sold. When the yields are down, the bonds are getting bought. Dixie down 0.2%. Not too much to report there. Actually, let's go ahead and take a look at that. It's an important chart. As you can see here, it is moving in the right direction for crypto holders. The Dixie, we want to move down and ultimately break back down 100. Will it do that? We don't know. Cannabis, green. Tilray up 3%. CGC up 2%. Mid-cap tech stocks are up, except Coinbase. Coinbase getting flush this morning, and we're going to go and take a look at why it is shedding 15% in the first 5 minutes of the New York session. We're going to take a look at that in just a second in the story section. C3.ai, AI name coming back, doing pretty well this morning, leading my mid-cap watch list up almost 3%. Big bank stocks. These are big banks, though. These are one of the top four here, up 1.2% in uniform lockstep. Look at that, getting bought at the same exact rate. Oil producers up, green across the screen. That's going to wrap it out, guys. That's going to be our market open. I think the most notable insight here is that the indexes are all opening green in uniform, and that the NASDAQ is leading the indexes. So that means that there is generally a rotation into risk more aggressively than into security. Okay, so that is going to round out our market open and our market open insights. Let's go ahead and get into the stories. Starting off, SEC sues Tron founder Justin Sun over TRX and BTT, and also celebrity promoters also named. So let's get into that here, get into a little bit of those details. SEC highlights unregistered sales, illegal wash trading. The SEC alleges that sales of two of Sun's cryptocurrency tokens, Tron and BitTorrent, constituted unregistered securities offerings. So it's not just Coinbase that's getting the spanking this morning in the media. Celebrity endorsements was also an issue that kind of came with this. And there's a lot of big names here, guys. Get ready for the fireworks. Go ahead and strap in. Also listed in this inquiry is Lindsay Lohan, online influencer, and boxer Jake Paul. I don't know if that's what he's most famous for. We have a performer, I'm not going to read that name, as well as musical artist Austin Mahone, Lil Yachty, Soulja Boy, Akon, and Neo. Hopefully you guys knew some of those names, probably at least Lindsay Lohan, if not Jake Paul. So a little bit of fireworks there. All but two of these celebrities have agreed to settle and pay over $400,000 in fines and penalties. So that's a good chunk of change for anybody. I don't care who you are. I mean, maybe if you're Elon, that's not that much money, but I'm sure these guys are definitely going to feel the pain from that amount of money. Well, we'll be watching that because that is an important story. And that's why I wanted to point out that it was really interesting that Tron was actually up this morning, because this guy is in a little bit of hot water here with the SEC. I don't know that he's on anywhere near as stable ground with whether or not, what he's doing with securities is above board in the US. But we will have to find out. All right. I'm going to just read these headlines because we're not going to get into the details of this. But Hindenburg Research, this is important because in January, they were the ones that sniped out and revealed that they were short Adani Group. And that ended up being 100% true. And Adani Group, which you've probably never heard of, but it was a giant fund over in India, is now it's like 1/16 of its value. And it's because of this research group that is also a hedge fund that shorts companies that it then releases research on. So they've got a really good profitable strategy over there. But unfortunately, they are doing a piece here on Block, which, if you don't know how inflated user metrics and frictionless fraud facilitation of enabled insiders to cash out on $1 billion. So not looking good. Basically, a very well-respected Hindenburg Group, who's had a lot of wins recently on a big international scale, is calling out Block. And if you don't know, that is Jack Dorsey's baby. That is one of Jack Dorsey's main investments, and I believe he might even be the CEO of that. I'm not 100% sure, but that's something to watch. If you're in Block, if you're using something within Block's ecosystem, you'll want to pay attention to that. Moving into some of the news from DC yesterday that kind of rocked the markets and led to a sell-off. DC tries to have it both ways on bank deposit insurance. And this is probably one we'll talk about a little bit here. Throw it over to Piper, throw it over to Tim to get their takes. But let's get into the details first so we know what we're talking about. America's financial regulators on Wednesday gave dissimilar answers on whether the government will guarantee bank deposits in excess of FDIC's current $250,000 limit. Will they do it? Well, Jerome Powell said on Wednesday, told reporters, "You've seen that we have the tools to protect depositors when there's a threat of serious harm in the economy or the financial system, and we are prepared to use those tools. And I think depositors should assume that their deposits are safe." Now, Yellen didn't say the same thing. She said this. She told senators at around the same time that blanket deposit insurance is not something that we have looked at in any way. So this is very, very uncertain. There's a lot of uncertainty here, and likely, this was the reason for the sell-off yesterday around 2:30, 3 o'clock in the New York Stock Exchange of a lot of major equities that had gained quite a bit on the words from this man right here on the right as he, tried to calm markets, and he did a pretty good job of that. And then this lady here on the right came out and totally, on the left, came out and totally threw a wrench in the whole system. So Tim, I want to throw it to you first. Are they how damaging is this that they're basically issuing opposing language, opposing guidance on the future of the economy here? And how important is FDIC for this moment where banks are starting to crumble?
They don't know what they're doing. They're very much lost. There was a very, very unconfident Jerome Powell, save for one question yesterday during that FOMC, and I think they might have planted the question. But other than that, he was constantly looking down at his notes, which has nothing to do with the questions he was being asked. Almost like he's trying to recall, what was I supposed to say when they asked this? What was I supposed to say when they asked this? Oh, yeah, I was supposed to say this. They don't know what they're doing. They are very freaked out. All of these attacks that are coming on crypto and other things that threaten the US dollar are simply responses to, we don't know what we're doing. Let's continue to talk a strong game. Let's continue to use words like resilient and safe when referring to banks. In reality, they, behind closed doors, are terrified. And as far as this distinction, what's them disagreeing, I'm not 100% certain. I don't even know if those quotes necessarily go together. Maybe they do. The tools that he's talking about using is just the Federal Reserve being able to print. But he didn't say printing money, but he talked about an excess of money. It's like, well, where does that excess of money come from? You can just turn money printers on and get that excess money at any point. Was disappointed with yesterday's meeting that no one really pressed him hard on money printing. Like, no one said that. But I think that this right here is just further confirmation to the American people. Our government is terrified. They do not know what they're doing. But if they let us know that, then chaos would break out.
Yeah.
This is just confirmation to us, though. They really have no idea what's going on. I'm interested to hear what Piper has to say, though.
Yeah, so you got to look at the Treasury's job versus the Federal Reserve's job, right? The Federal Reserve, he wants, faith and belief in the money system. The Treasury's job is to make sure that there is money, right? So when Janet Yellen is sitting there talking about we haven't discussed a blanket thing here, because she knows what the actual cost would be, and it's just not feasible. The Federal Reserve would have to double time their printing levels to cover that. I think the big takeaway from what Jerome Powell was saying is we should assume, and that's what America does. They assume that their money is safe in a bank. But at the end of the day, Janet Yellen came straight out and said, we haven't discussed any way to make sure that everyone's money is safe in a bank. And those would be the two big takeaways that I would take out of that conversation of two people telling two stories, right? I would take that, one said you should be able to assume that your money is safe, and he would be correct. And the other person said, there's no discussion about covering everyone's money, which is the reality. And then when I look at those, the assumption versus the reality, I'm going to put my money where I know it's safe, and that's in a trustless system. So.
Well, and here's another thing to keep. Maybe this goes without being saying, but I'm going to go ahead and say it just in case someone else hasn't connected the dots.
Tim.
Yesterday in chat, there was a very funny exchange between some of our community. By the way, our community is the best community in all of crypto. You love you guys. We talk about that all the time. Anyway, what they joked about was they said, "How about this? Why don't we just get everybody to go take $100 out of their local bank and see what actually happens? Let's see if these banks are actually confident." The joke of being, of course, that would destroy the banks. Another person commented, like, "Dude, we don't even need $100. Just ask everyone to go take out $5 from their bank right now." There is this thing, and to be fair, you have to respect it because you don't want mass chaos and panic. As much as crypto people would sit back with their popcorn and laugh, that would cause a lot of problems that would extend to our personal lives, right? If there was chaos and if bank runs happened in mass, it could be very, very disgusting. So what the government is doing right now with that propaganda of safe, resilient, banks trust them, they're trying to prevent people from going and taking their money out of banks, which would cause mass hysteria, not just in the U.S., but around the whole entire globe. But they're not doing a great job of selling it. I think they're getting some sheep. There's definitely people in the United States. So there's people all over the world that are more like sheep. They'll just listen to CNN, or they'll listen to Fox, or they'll listen to CNBC, or they'll listen to whoever the president is, and they'll just take whatever they said at face value and say, we're good. But people are waking up. And I'm not talking about woke. I'm talking about people waking up financially and realizing my money in USD the days are numbered, that it actually has value. And they're trying their best to stave it off, but I don't think it's necessarily working as well as they want it to.
Yeah. Yep. Absolutely. Absolutely. Well, we have alluded to it several times in the show, and back on my screen, I've got beincrypto.com's summary of yesterday's major events at the big Fed show, the circus that we all pay attention to very closely so that we know whether or not we can sleep at night, basically. All right. So the Fed increased interest rates by 25 basis points. You know, that suggests rate hike pause likely. So let's get into some of the details here. Again, this is from beincrypto.com. U.S. Federal Reserve Chair Jerome Powell said that the bank had decided to increase interest rates by another 0.25%. Powell said that the collapse of several banks had driven a more cautious approach with a rate hike pause imminent. U.S. Treasury Secretary Janet Yellen's speech after the Fed announced saw Bitcoin fall below 27,500. And then some rhetoric that changed was replacing the phrasing ongoing increases with additional policy firming, suggesting that the central bank may pause increases at future meetings. So there's definitely a lot more nuggets from the event yesterday over at the Federal Reserve. But one thing I noticed that I wasn't expecting, because I haven't really been tuning into this sub narrative of the overall Fed narrative, is the investigations. So the Federal Reserve is it maybe not as an institution, but its processes of oversight and monitoring of banks like Silicon Valley Bank, that is under investigation by I believe it's the Attorney General Barr. And so there was a lot of questions about that I was not, I just haven't been tracking that story, the fact that they're under investigation. This was something that, the most that I know about is like Elizabeth Warren said that Jerome Powell should recuse himself of the investigation. So the investigation is mostly on Silicon Valley Bank. You should know it's mostly on them and their reporting and how they were complying with accounting principles and guidelines. But it also is more than likely going to extend into the monitoring systems from the Fed and other monitoring agencies and regulatory agencies that should have prevented what happened over there from happening. Absolutely. So we'll probably just go ahead and skip over on this in terms of throwing it to you guys, because we've talked about this. We've beat it with a dead horse. 25 basis points is what we got.
Beat it with a dead horse, or we beat the dead horse with a stick?
Both.
Yeah. Okay, good.
Both. And so before we get into the thumbnail story here, I just want to remind you guys, 1 day, 15 hours, 11 minutes, and by the end of this sentence, 1 second is how long you have to go get your tickets to Bitcoin 2023. Now, this is going to be a lot of fun. I'm going to be there. There's going to be 150 speakers. There's going to be 250 sponsors, and it is just a lot of fun. Where is it? It's in Miami Beach. So you get to go down, get a nice tan, say hello, practice your Spanish a little bit, maybe down in Miami. It's going to be May 18th through the 20th of this year. We're going to have a lot of fun. Hope that you can join us. Now, how could you purchase tickets to such an event if you were interested? Well, all you got to do, and hopefully you're on my screen still, is you just go down to our description under the YouTube video that you are currently watching. Just go down there and you'll see at the very bottom, there is a delicious link right here in Bitcoin 2023 conference. You click that link, you use the promo code Investing Bros. That's Investing Bros, no spaces, and you get 10% off your tickets to one of the greatest events that has ever been put on Earth. So you're going to really love it. It's down in Miami. I'm going to be there. It's going to be a lot of fun. Hopefully you'll be able to take advantage of that 10% off. And time's ticking though. Time's ticking because the prices are about to go up. You got 1 day, 15 hours left. Again, just go down into the description on our YouTube channel, the video you're watching right now. Scroll on by all the other cool links. We can talk about those later. But right now, you're focused on this link right here. It's the blue one. It's the best one. And now let's get into our thumbnail story. The SEC warns Coinbase of potential legal action over staking. So let's get into the details here, guys, because we want to definitely chew on this thoroughly and make sure we're providing the best insights we can. The U.S. Securities and Exchange Commission, maybe you've heard of them, has sent a Wells notice to Coinbase, the largest cryptocurrency exchange in the U.S., warning the company over potential illegal action related to some of its staking products and digital asset listings. So there's a bunch of details here, but I want to go ahead and throw it to Tim. What do you think the likelihood of Gary Gensler looking good is from all of this? Is he going to come out of this looking good?
He is not. He is not going to come out of this looking good. And that's kind of what the joke of the poll was today. Those of you who have voted on it is I don't see any way that Gary Gensler and the SEC even begin to sniff a win in this lawsuit. And to kind of reflect that, there was a some of you might have read it, long Twitter post put out yesterday by Brian Armstrong, CEO of Coinbase. And I want to show that. I'm going to go through it, and this is weird, but we got time. We're going to just read through this.
I think you got to read it, Tim.
We're going to read through it word for word. We're starting over here. Brian Armstrong, nice long thread. Today, Coinbase received a Wells notice from the SEC focused on staking and asset listings. A Wells notice typically precedes enforcement action. Let's go ahead and read some of this other stuff. Got to show more on this one. Number 2, 2 years ago, the SEC reviewed our business in detail and approved Coinbase to go public. Our S1 clearly explained asset listing processes and included 57 references to staking. Coinbase runs a rigorous asset review process and has rejected more than 90% of assets that have applied to be listed on the platform. Keep moving on. While we understand that this is all part of the journey to reforming our financial system, we are right on the law, confident in the facts, and welcome the opportunity for Coinbase and by extension, the broader crypto community to get before a court. We are proud to stand up for our customers and the industry in the moments. Moving on to number 5. Going forward, the legal process will provide, actually, let me go ahead and show more because it's going to want a lot more. Going forward, the legal process will provide an open and public forum before an unbiased body where we will be able to make it clear for all to see that the SEC simply has not been fair, reasonable, or even demonstrated a seriousness of purpose when it comes to its engagement on digital assets. Can I get an amen in chat right there on that line? The SEC has not been fair, reasonable, or even demonstrated a seriousness of purpose when it comes to engagement of digital assets. We could pause right there, but let's keep going. Let's see what else he says here. Moving on to number 6. In the meantime, Coinbase will continue to do what we do best. Build the most trusted products and services in our order to advance our purpose of updating the financial system and creating a more economic freedom in the world. Great plug right there, Brian Armstrong, of your vision, your mission, and some good advertisement there. Great
Always
plug.
Be selling.
Number 7, we're excited to work with all governments and regulators around the world who are focused on putting in place clear rules to regulate the crypto industry. So he says you can read more here, but then we go into another thread, and this is from the chief legal officer. And this one is a fun one as well. Again, thread, got to read through a lot of stuff here. I'm just going to go ahead and read it word for word. We'll break it down. Coinbase received a Wells notice from SEC, so something's going to be copied. After years of asking for reasonable crypto rules, we are disappointed that the SEC is considering courts over constructive dialogue. But if courts are required, so be it. We'll defend the rule of the law. This is one of 15. Let's keep moving on. Over the past 9 months, Coinbase has met with the SEC more than 30 times, sharing details of our business to build a path to registration. During this time, the SEC hasn't given basically zero feedback on what to change. I don't know if he meant to put it that way.
Has given.
I think he meant has given basically zero feedback to what changed or how to register. Instead, today we receive a Wells notice. This is number 2 of 15. Got a lot to go here. Let's just pause right there, though. They have been in complete compliance. They have been going above where they need to go, working with the SEC. So this whole thing is just coming out of the blue. Let's keep going on, though. When Coinbase filed to go public in 2021, our S1 described our business in much detail. This is including 57 references to staking and details of our asset listing. The SEC approved us to go public knowing these details. Now they have changed their mind on what is allowed. Again, right there, we probably could stop right there and say that right there is going to win it, the fact that it was approved. But let's keep going on. In 2018, we acquired 2 broker deals licenses in an effort to become regulated by the SEC. These licenses are currently dormant, and we have been unable to activate them with the SEC for digital asset securities. Last July, we filed a petition with the SEC calling for more regulatory clarity. We have yet to receive a response to our petition. This is really big. I remember covering this, that the Coinbase was literally like, we will do whatever you ask of us. Just tell us what the rules are. The SEC has said nothing. For comparison, over many years, we have been able to successfully become a licensed and regulated crypto business in a number of other jurisdictions around the world, including Singapore, Ireland, Australia, and Germany. We've also been able to successfully become regulated by another U.S. federal regulator, obtaining our DCM and DCO license from the CFTC, and by many U.S. state regulators. The SEC remains a sole outlier here. We don't list securities. Of the thousands plus of crypto assets Coinbase has reviewed over the years, only roughly 240 of those have met our standards to list on our platform. We believe a large number of crypto securities also exist and should be available to register and trade on the SEC-registered brokerages and exchanges, a point we've made repeatedly in our discussions. The truth is today there is no clear rulebook from the SEC on crypto, and efforts to engage with the SEC are met with silence or enforcement actions. They have not followed a good faith rulemaking process with industry as required under the APA. At times, the SEC and CFTC don't agree on the definition of a commodity or a security. For instance, CFTC chair has said Ethereum was a commodity, while the SEC chair has hinted Ethereum might be a security. Keyword there, might be a security. They're just throwing out lawsuits, even though nothing has clearly been defined. Keep moving on. Even when giving us our Wells notice, the SEC wouldn't specify assets giving them concern or what specific arguments that we've made on staking are wrong. Instead, we were simply told to consider the chair's generic statements. It is hard to throw the rulebook at an entire economic sector when there is no rulebook and people are responsible for the rulebook can't even agree themselves what the rulebook should say, even as we have asked for a rulebook. So what happens next? We avail ourselves of the court systems to finally start to get some clarity for the crypto industry in the U.S. Ironically, establishing some case law may be our best shot at getting the regulatory clarity that the industry deserves. You can see the Wells notice for yourself. We welcome more clarity. So we can go off my screen here, back to me. Long thread here from both of them, but ultimately, there is just no way the SEC wins this. They're just now throwing out lawsuits for the sake of throwing out lawsuits. But Coinbase, again, I still think Ripple and XRP are going to hand Gary Gensler and the SEC their walking papers, and that is going to be a win for crypto in general. But Coinbase's statements, like Ripple just did things with no rule book. They just operated, and then out of nowhere, SEC comes after them. Coinbase has been the most compliant company to an irritating point. There's been several people who comment negatively about Coinbase because of how much Coinbase has cooperated with regulatory agencies. There is you can never say zero. 0.0000001% chance that the SEC actually has some way of winning this. The evidence is overwhelming how much Coinbase has been trying to get a rule book, trying to comply, doing everything in their power to stick to the rules. And now the SEC is just making crap up to go after crypto companies. This just continues with the narrative that we have been talking about for a very long time now, and that is we are in the fighting stage. And unfortunately, if you guys have ever watched a boxing match, sometimes when boxers get hit in the face, their eyes swell and they can't even see, but they still try to throw some punches. I think that's exactly what we're seeing happen from Gary Gensler. I think that's the perfect analogy. Gary Gensler and the SEC have no idea what they're doing. They have taken so many L's recently. Their eyes are swollen. They cannot see. They're just swinging anything they can think moves, and it's not going to land. I cannot wait to see this go to court and Gary get his butt handed to him and watch. Like I said, you guys didn't vote for it, but watch Auntie Beth fire old Gary Gensler because he's not doing his job and getting rid of crypto. What are your guys' thoughts on this issue?
Go ahead, Piper.
So, maybe this is crazy to think, but maybe all this hatred that Coinbase has been getting for their activity has been with a purpose. They knew that the SEC was going to sit on their hands, not do anything, try to drag it out as long as they can before they make anything that would bring mass adoption of money into the community of crypto assets. And so they knew that by doing all these steps, regardless of the repercussions from the community of crypto people, that they were going to have all this documentation built up. Like it's baiting the trap, right? Like we know that the SEC, how they're going to handle this. They don't want crypto. They don't want us to have any solid exchanges. So we are going to overly put ourselves into bad light with the crypto community to build this case so that when they do what we think they're going to end up doing, like they've done with everyone else, we've got them right where we want them. We've got all the documentation. We've got everything that we need to crush the SEC, make Gary Gensler look like a failure in his field, and win this case and establish a baseline for the rest of the community going forward.
Yeah. And my reaction is I'm actually kind of fearful about this. Not because I don't think that Coinbase would win. I think that's kind of a given. I think the issue here is that this kind of communicates desperation from just the establishment, the Washington anti-crypto establishment. Like this is it's a cheap shot in the moment. Obvious. I feel like they know that they couldn't win this, but in the moment it looks good in headlines. Maybe it sends the right signals to the right powerful people and interest groups. But it seems like a very desperate blow, unless there's things that we don't know. There could be a lot of stuff that we don't know that maybe they have Coinbase on, they're just not disclosing yet. But it just seems desperate, and that kind of tells me that maybe there's something going on in Washington, in smaller circles that's reaching a breaking point. And so the SEC, being a basically an agent of whatever group that is trying to do everything they can so that balance doesn't get broken. So I'm not really sure, but it's like it leaves me scratching my head, and the only conclusion I can really come to is like there's a lot going on here that I don't know, because it doesn't make sense. It doesn't make sense why you would go up against the poster boy for compliance.
I'll tell you exactly why it makes sense. And again, I'm going to stick with that, and we're going to close out here in just a second, but I'm going to stick with that boxer scenario. He's cut. His eyes are swollen. He cannot see. It's blurry. He's just swinging anything he thinks is moving. It is because they are desperate right now. They are losing the battle. They just had these banks crash. They know that more are coming. They know that the general populace's trust in the current financial system is waning. And if they don't do anything, it's going to shift over to crypto. Look at what they did. Just this story made Coinbase's stock drop 15% in one day. Now, is it going to bounce back up? Absolutely it is, especially after the lawsuit. But I told you, they're sheep, and they know that they cannot affect everyone, but they can affect sheep. And just waking up this morning to a headline, someone who just watches CNBC every single morning, and they hear Coinbase, which most people at this point know Coinbase is a crypto exchange. Oh, Coinbase in trouble with SEC? Well, they're not going to look into the details. They're not going to read Brian Armstrong's tweets. They're going to be sheep, and they're going to be like, oh, well, that must be a bad thing. They're in trouble with the SEC. They don't know that the SEC is losing to Ripple. They don't know that the SEC just got shut down by a court in the issue of Voyager with Binance.us. All they know is whatever the newest headline is, and it's a delaying tactic. It is we are bleeding. Banks are bleeding. The U.S. dollar is bleeding. And if we don't do something, we're going to lose control. And that's what this move is. We're gonna talk maybe more about this tomorrow. I'm sure this is not the last time we will be talking about Coinbase v the SEC. But guys, that is all we have for you today. Make sure, as T-Shrim showed you guys, go down to our link and click on some of those. Not only to support the channel, there's a lot of options that really support you. Recently, we entered that partnership with Chart Prime. And let me tell you right now, first of all, you guys need to join our Discord. But in our Discord, you will just hear raving reviews of people who just started joining Chart Prime. I'm talking about a week, 2 weeks into it, and are already making monstrous trades, profits. And it is because Chart Prime, I'm not going to lie to you guys, I've tested several indicators out there. There are great ones. I've never seen one as good as Chart Prime. And the cool thing is, with the link down below, when you use our link, you get 45% off your first month or your first quarter. And then, boom, the amount of money you'll be making in your trades with confidence will well outweigh any dollar you pay for it. Make sure you join that. Join our Discord. We're doing some amazing things over there. With that said, though, that's all we have for you guys in today's video. But we'll be seeing those in Discord and our Patreon today for our weekly AMA, our gold and diamond members. The rest of you, we will see you tomorrow morning, same time, same place. You guys have a great day.